You're not 100% wrong there. That's for sure. Hey, Tony, happy Friday.
Hey, what's going on, guys? You sound like you're having a good day. That's why I figured I'd jump in and change that tune a little bit.
No, I mean, I know most people, or some people in here probably weren't here at the beginning. The real thing that Joe said is, I don't know if you want to restate it, Joe, but is essentially that, the UCC are working on an issue with the whole listing, and they're hoping to provide an update soon. But that needs to happen, and it takes 1 minute to tweet that out. So hopefully they do that.
Yeah, but
Well,
Tecmo, why do that when you can go out to dinner with an influencer and have him tweet it out on your behalf?
Yeah, that's what I mean. As far as like, you can't tell me you're busy working on this stuff and you don't have time to update creditors when you clearly do.
well, you can have him DM people on your behalf. That works better usually. Go the Swan Bitcoin approach. But yeah, so there's some context that is missing that no one seems to have when it comes to this NASDAQ listing. In order to get listed, you need to file the Form 10, right? So in the bankruptcy code, there's it's like a loophole where you can get your listing approved very quickly within that like 60 days, 90 days, whatever the window is. Whereas otherwise it might take a year, sometimes it takes 2 years. It's a very, very difficult process to become a publicly traded company. But in the bankruptcy process, there's a loophole that allows you to just kind of expedite the whole thing and skip a bunch of steps. So they can only do that while they're in bankruptcy. If we get out of bankruptcy, then you have to go through the entire process. Could take a year, could take 2 years, could take a long time. So there's a big difference between NewCo and orderly wind down, and it's the structure of the corporation. So under NewCo, there is one entity which holds a bunch of, I guess, let's just say assets. Part of the entity is the mining company, part of the entity is the e-staking, and part of the entity is all the hedge fund-esque trades or investments, whatever you want to call it, that Celsius made. So you need to have 3 years of audited financials to get your Form 10 approved, and an auditor has to be able to actually audit the company. So because NewCo is holding the Celsius investments, those investments have to get audited, which would be literally impossible, right? We're talking about $9 billion of intercompany loans. Who knows where the money came for all of these purchases? Who knows where these purchases are? Who knows if we even know all of the purchases? It would be very, very difficult to get that approved. To get an auditor to say, okay, fine, I will write my name on this document that I audited these financials because it's a fucking mess, right? So what they were trying to do is they were trying to get an exemption from the SEC saying, we're okay with you only auditing the mining company and then everything else doesn't matter because Celsius doesn't exist. The SEC said no. And now their options are orderly wind down.
They said, as far as you know, they said no to the mining company alone, or just the entire thing?
The entire thing with the Celsius assets.
Right. Okay. But the mining, as far as you know, the mining.
They didn't say
if they
no
were to dumb it
NewCo.
down. Right. If they were to dumb it down, though, to mining alone, as far as you understand, that would probably get approved by the SEC to fast track this, right?
So here's where they're at now, right? They can try to audit all of Celsius, which we know is impossible, or they can have a NewCo that is just a mining entity, and then they can send in the audited financials for the mining company, and then that's that. We can still get listed, but now the structure of NewCo is completely different. It can only be a mining company. It's either only mining or it's not going to get approved. We can get out of bankruptcy, but it's going to be a privately owned corporation with all of these assets. That's NewCo. Under the orderly wind down, we have a privately owned mining company, which we will all get equity in, and then everything else will get liquidated. So all of the investments that Celsius made are going to get liquidated. There's going to be a plan administrator, whatever, that's going to handle all that. All the crypto that's left, no staking, no whatever, it's going to go to creditors, and there's just going to be a privately owned mining company that they will, with the help of Van Eck, go through the regular process, get the company to be stable, fix the facilities, and then go through the regular process of becoming a publicly traded company. And we will cash out in the IPO. So there's a so like Tecmo said before, if you look at the incentives, if you go the orderly wind down route, you have to sit on the stock, you got to hope that it succeeds, and then you got to hope that they IPO. But you're going to get more of your crypto up front. If you go through the NewCo route, we have 2 UCC members that secured themselves board seats, and the board secured themselves 5% of NewCo equity. It's an incentive program. I don't know what the milestones are. I'm assuming probably not that great. It's probably going to be relatively easy for them to hit those milestones, I would imagine, since they're the ones deciding what the milestones are for themselves. But 5% of NewCo is around $70 million. So you're looking at potentially every board member getting $10 million in what's it called? Just equity in the company. Yeah. So there's a $10 million per board member incentive to go this NewCo route. I don't think the SEC is going to budge. Why would they? They're not exactly known for being flexible. So it looks like we're just kind of wasting our time. And if they go the mining company route, they can still get 5%, but it's not going to be 5% of a $1.4 billion company. It's going to be 5% of a mining company that may or may not be valued at a few hundred million. So you're looking at $10 million of stock incentives versus maybe one. I don't know. So if you're a UCC member and, let's say, put myself in their shoes. I like to consider myself a pretty decent guy. If I had $10 million potentially on the line, fuck you guys. Okay? Fuck creditors. I'm doing, realistically, what's in my best interest.
Yeah, and it totally makes sense, man. I mean, it's the self-interest again, of course. So my question then is, basically what you were saying about in the bankruptcy code, the loophole, and the loophole is that you have to remain in bankruptcy for either of these plans to come out. So out of everything you said, that's kind of really what just stuck out to you, right? That's the loophole. And so does that mean that they cannot set an effective date? Is that so? I mean, like, it could just keep on dragging and dragging and dragging, or, I mean, that's what it sounds like to me. Is that right?
I was
Well, right
under
now
the
it's
impression that you could still, the way they built the plan, you can have an effective date even if it's not entirely clear what's going to happen with the listing and with a NewCo or orderly wind down with those assets. Meaning from what my understanding, they can still, even if they are delayed as far as the SEC, they could still do distributions. Is that your understanding?
Yeah, they can do like initial distributions. There's no reason why they can't. If they just if let's say
which would mean the plan went effective. Like if they can do distributions, that means that they had to pick an effective date, and at that point, we're not the most important thing, which is that people are getting their distributions. That'll happen, and
the plan isn't
and they could
required.
still function as a business. I mean, just because they're in Chapter 11 bankruptcy doesn't mean they can't function as a business, which offering their distributions, in my opinion, would be, operating the business.
Right. It would just take longer to dissolve OldCo.
Well, I don't think the plan has to be effective for them to make distributions. Right? They can make initial distributions, even if it's let's say it's supposed to be everyone gets 40%, whatever. You can do 20, and then sit on the rest for however long. You can do that. It's not.
Yeah,
There's nothing
I
stopping
wasn't
them.
clear on that, if I, it seems to me that in order to do those distributions, basically the plan would have to go effective because you're already implementing part of the plan. You're making you're also doing the calculations. 15 days before the effective date, they have to do the calculations based on the then current prices of Bitcoin and Ether, and then you're making distributions, which is part of the plan. So it sounded to me like at that point you're effective. We're done with Chapter 11, and then it's a matter of how long it'll take to unwind OldCo, and either create a new NASDAQ listed NewCo or go to orderly wind down and have it held privately and eventually go to public. But at that point, you were already effective. It was my impression, but I'm not 100% clear on that.
So that's how they wrote it for the day that they finalized like asset prices. But I'm sure they could probably change that. It's not. That isn't like a bankruptcy thing. That's just something they arbitrarily gave themselves. The 15-day window.
Right, but I'm thinking that there
So
would
you
still
think
be an
they can do
effective.
distributions? They can do distributions and still not be out effective, meaning we're still not out of bankruptcy. It's just hard to understand how that would work legally.
Well, there's nothing in bankruptcy that says you can't pay some of your liabilities. And what are the liabilities? They would have to get the judge's approval, but I don't think he would say no. They could just, if you tell the judge, hey, this process is going to take a long time with SEC and NASDAQ, creditors' funds doesn't need to be sitting for no reason. We can give it back to them. I don't know why the judge would say no. I mean, I don't think he would.
Yeah, no, I think he would say yes, but that would mean that we went effective because you're already implementing part of the plan. Meaning at that point, once you do distributions, there's no going back and like rebidding or anything. I guess you can rebid on the specific assets that may not be keeping, or if you're under orderly wind down, if they wanted to go through that process of rebidding the management agreements and all that, they could do that. But I don't. It's hard. I don't see how they could do distributions.
Well,
Yeah.
Well, if they do distributions, I don't think they can pivot to another plan. Meaning, it's either
Right.
Fahrenheit
Exactly.
or BRIC.
Yeah. To me, the most important thing, and again, I'm not that much more in the know than everybody else, but to me, the most important thing is like the silence is killing everybody, and we want to know that priority number one is getting out as quickly as possible, even if it means not maximizing the recoveries on, like, if we have to pivot, a NASDAQ listing would have been great, but if it means that we have to wait, another 6 months for them to work through the issues so that we can get the entire NewCo plan, including staking and everything, approved, people don't want to, creditors don't want that. And number two, which I guess is part of the same thing, is that we want those distributions as quickly as possible. Like, even if we do get held up and we have to pivot to NewCo, to orderly wind down, like the creditors, again, priority number one is getting out as quickly as possible and getting those distributions done. And to me, from the conversations that I had, it seems like that is entirely their focus right now. I do hear, the criticisms as far as like, misaligned incentives and things like that. But to me, that's just like part of what we've been through for the past year and a half. Once this thing went into Chapter 11, it turned into a very inefficient, process where creditors are not number one. The process kind of takes over, and there's people with different incentives, and there's money being spent that makes no sense, but that's just part of the legal process. It's been very frustrating throughout. So like I just don't. I'm not the type of person that will jump to say that people are making decisions purely based on incentives that are misaligned. Just like in governments, there are people that do that, people that don't. I guess you're right. All things being equal, if I was had a structure where I could benefit much more from doing it one way or another, all things being equal, obviously I'd pick the way that's better for me. If there's a slight difference and there's potentially more recovery, so then I guess you're kind of corrupted in your thinking, like, okay, it's slightly better right now, but I'll do better off in the long run. I just don't think, like, if it was clear that there's a certain path that isn't the right way for creditors, that people like Scott and Tom would make decisions just entirely based on what's best for them. I haven't.
You have to be realistic, right? Doesn't matter, Scott and Tom have money, they don't have money, or whatever the case may be. you got to be realistic, right? It's nice to say like, oh, I would never do this, I would never do that. But once you're actually in that position, um, Scott and Tom are fighting for keeping NewCo. I mean, I know that for a fact. Like, let's be honest here. That is happening, as opposed to orderly wind down, which I think we all want at this point. If it's not a publicly traded company, maybe it'll get there, maybe it won't. Either way, our mining is a wreck. So just because it gets listed on NASDAQ doesn't mean it's going to do well, right? It's not ready, which was my issue from the get-go. Our mining is not ready to be public. It can get public, and hopefully people just buy it because it's a Bitcoin miner, and hopefully it does well for everybody, myself included. But if it doesn't, then we're still fucked. And if we go, how long? 3 months, 4 months down the road, yeah, we get the exemption, but it takes us 4 or 5 months to get there. We're looking at that. We're past the halving, let's say. We already have, one of the oldest fleets out there. Facilities aren't fully set up. We do our quarterly report, and it's just brutal. And the stock drops 25%, even though Bitcoin is up. Did we gain anything?
So if you were in entirely in control, like at this point, what would you do with all the assets?
I would pivot to orderly wind down. I would get us out of bankruptcy as quickly as humanly possible so that we can get whatever is left. And getting our money quicker, sooner, will have a better recovery than whatever NewCo may or may not become.
So what does orderly wind down look like to you? Because to me, like I was saying before, orderly wind down can look just very similar to NewCo. You can sorry, I got a call. You can modify NewCo's plans to adjust for whatever issues they're dealing with, or you can, and that'll look very similar to an orderly wind down where you have a mining entity that's capitalized. Like I don't see a real difference. So in your mind, what would orderly wind down look like?
Well, no, the difference is in the structure. So in the NewCo is keeping all the assets. In the orderly wind down, all the assets are getting liquidated except for mining. That's the difference.
Right, but in
Quick
terms of
question
mining,
with that.
sorry.
Well, how much are creditors funding the private mining company in the orderly wind down?
Right, that's what I was getting at. Like it really could end up looking,
50 million.
as far as the mining piece,
Well,
it could
because
end
of
up
the,
looking
I think it's
very
100.
similar.
50 million. The miner itself is 50 million. The total OWD funding is 300 million in total. 50 of it is for the mining entity.
But that could change. Meaning that's one of those things that they left enough leeway in there so that if things change, they can modify it. Like originally we were told, 450 million is going to staking, and then like by the next
Joe,
thing,
the OWD was formed before Cedarvale was purchased. So
exactly.
I'm telling you, the OWD plan says 50 million, but what are we going to do with Cedarvale?
Exactly, right. So I think if they did an orderly wind down today, they would end off changing those numbers to recapitalize, to recalculate how much they need to capitalize the orderly wind down mining company. Originally we were, even with NewCo, we were told 450 million for Ether staking, and then by the next disclosure statement, it had like a footnote that was 350 million that would probably end up going to staking, and then the rest would, I'm assuming would go to capitalize the mining company. And then they bought Cedarville, so that completely changed things. And then they kind of dropped, hinting at how much of this is going to go to stake. My guess is most of that 450 million over time would end up going to mining more than staking. They would, the part of the plan was definitely staking, but it went from 450 to 350. It probably would end up been, with Cedarville, they probably would have ended up diverting, or not diverting, but reallocating a big chunk of that 450 million to capitalizing the mining piece and Cedarville. So under orderly wind down, that probably would end up being a modification as well, where they end off increasing it from 50 million to say 200 million for Cedarville. So, it goes back to, like, I think the most important thing that people want to know is, no matter how this plays out, like, priority number one is not to derail the process where we, have to start again with bidding or anything like that. We want out of Chapter 11 as quickly as possible, and we want those distributions at least no less than was disclosed to us, as quickly as possible. And then whatever happens with the mining, hopefully it's good and they do it the right way. But that's secondary to just getting out and getting those distributions.
Yeah, but mining, like, why do we need to fund all that? It's supposed to be a standalone business. So let them operate it. Let them dilute if they have to. It's the same thing. We're getting diluted no matter what. Whether we get a lower distribution now versus, we dilute our equity, it's the same shit. There's no difference there. Let them raise money if they need to. Give them 100 million. Sell Cedarvale. It's no longer within the plans. It's not
Right.
that
So
complicated.
that's what I was asking. So to you, new orderly wind down looks more like a liquidation, just a slower, controlled liquidation.
It is a liquidation. That's why it's a wind down. You're winding down everything
Yeah,
except the mining.
I think orderly wind down was a misnomer, like the wrong term to use for the orderly
No, it's
wind down,
not.
because it really wasn't an orderly wind down.
It's a
They were
Chapter 11 liquidation. It is an
yeah.
orderly wind down. They're literally liquidating the assets. Chapter 11.
Well, they called it that, but at the same time, they were capitalizing, not doing what you just described, which is not fund, just keep it operating and get rid of it. They were
So
looking under orderly wind down to capitalize it with 50 million under BRIC, which I think is something that they could definitely modify based on how they got us to vote, and so they could end off with a company where they're operating it, and eventually they can either go public or but they're capitalizing it just to a lower level, which again, I think they left enough leeway in there that if they have to pivot to orderly wind down, they can do it as long as like, the distributions end off roughly what we were, at least as much as we were getting, if not more, under NewCo. But I think they would probably end off capitalizing. They would end up capitalizing the orderly wind down mining entity more than the 50 million.
Okay, hey, I'm going to jump in here quick about the mining. So we got mining private, and we got mining ETH staking and another investment portfolio for public. The SEC may have some issues with the investment portfolio and the ETH staking. So, they may just do the mining, right? And let's just say we still considering, because we're all saying the same thing, that it's going to be 450 million, that the majority of that's going to end up going into mining anyway over time, right? But at least we'll have an accountability of a NASDAQ ticker and having to, file all their accounting docs and be held accountable. Whether the investment's good or bad, who knows? I'm just talking about trust right now. Or we go into the private mining in the orderly wind down, right? And now it's 50 million, but as Joe said, we could potentially be left it kind of open ended. So let's just say because of Cedarvale, we have to fund an extra 80 million to get that thing built out and whatever, right? So now it goes up to 130 million. Plus the fees and the orderly wind down were more expensive anyway. So now we're almost even, Steven. So I have a trust issue. Would you rather go with a mining company out of the NewCo and just eliminate the ETH staking and the alternative investment, whatever? Or would you still consider the orderly wind down and try to trust people in some type of Bitcoin mining private company that we're equity holders in?
See, I don't know everything that's going on behind the scenes, but like just speculating, I think I would want to try to keep as much intact as possible. Like, again, if the priority is to get out, you want to keep as much intact as possible, do the modifications without having to go through any part of this process again. And NewCo, under with the NASDAQ ticker is much more valuable, and like you said, it has accountability. So I think that is the only reason that people said, you know what, we just want to get out, and we're okay going with NewCo and investing in that because it looked like it was promising having a NASDAQ listing. So that's obviously preferable. But again, the number one priority has to be, if that's going to be a 6-month, 12-month process where they have to go through any kind of like major, redoing anything, revoting or rebidding, nobody wants that. And like I said, I don't think they want that. Their eye is on getting out.
Yeah, but how many months at 20, 30 million a month is it worth it to get a higher equity valuation? Potentially, right? Because it's not guaranteed. I don't think the SEC is going to change their stance, right? So how many months are they going to, fuck around and then be like, all right, fine, we'll just pivot to mining only?
Well, and that's what I'm saying. I don't see why we can't do that right now, I mean, not right this second. We don't know exactly all the issues, right? I mean, we're all kind of speculating. But what I'm saying is that if they are having issues with the other part of the quote unquote crypto business and the mining, they should have no issues. There's plenty of public miners. And,
It's not in the plan.
Well, I get that. But I mean, well,
because the plan calls
They have,
if
they have enough. Tony. They definitely have enough leeway to cut out mining, either staking or NewCo holding all these other assets.
The illiquid assets under this plan would go with NewCo versus with the plan administrator. So I don't know what the tax consequences are if you try to flip that. Number one, because I'm sure it's going to be massive because you're looking at $400 million potentially, right? That's what they called it. Under the plan, if they can't get this approval, you pivot. So if you do anything other than that, you might need to resolicit.
Right. And what I'm saying is, I believe it's in the creditor's best interest to resolicit if they don't get if they could get a public listed miner right away instead of giving us some private miner that will be diluted away, or even just who knows how it'll be run. Not saying anything about Van Eck, but I mean, whatever, right? They're not going to care about us at that point, and that's just where I'm going at. So I think that,
Whether
I don't see how it would be that hard to modify the plan and to just, go to orderly wind down, except throw that mining, and now it's a public ticker with this much funding, and then that just do your basic math to get us back our distributions,
Yeah, but when you resolicit, they're gonna have to resolicit. What is it, like 3 weeks, a month? Then they have to vote. We have to vote. That's another month. Then they got to tally, and I'm pretty sure you have to reconfirm. That's another month. And then they have to go through this entire process. That's another 2 months potentially. So
that's what I was saying. We don't want that. If they have leeway to modify and cut out certain aspects, whether it's NewCo or orderly wind down, we want them doing that. We want them to not force this into another 6-month process of solicitation and confirmation. Like they left enough wiggle room that I believe, I hope, not, again, not knowing in detail like all the issues and what the options are to get around those issues. My hope is, and that's something that I think all creditors are pushing for, is that we should not do anything that delays the process of getting out of Chapter 11 and getting those initial distributions done. And if that means modifications that are allowed within the plan, that is what needs to be done. Even if you could end off with pushing through the process and end off in a year from now with a more valuable NewCo or orderly wind down co. We don't want, creditors don't want that. We just don't have an appetite for another 6 months of spending and unknown of what it's going to look like at the end of the day. So my guess is that is what they are struggling with right now and trying to figure out all the options to make any adjustments that are necessary to keep the eye on the ball of getting out as quickly as possible.
Tony, when I was reading the BRICS agreement, when I reread the OWD docs, I believe the BRICS agreement has a December 31st, 2023 expiry. I think there's a date for OWD, at least for BRICS. There's a deadline coming up.
Great.
I'm sure they'll sign a piece of paper for another $1 million.
But let's say we have to go through the process again, right? Let's say they figure out what's happening and there's $100 million of savings, right, quote unquote, for creditors. If it takes 5 months, that's $100 million in legal fees. And then we just waited another 5 months to get back the exact same amount.
Yeah, at the end of the day, though, we are hoping that the issues where they were billing up a bunch of hours is kind of settled at this point. So I'm hoping that it doesn't maintain that. Actually, I'm going to hope it doesn't maintain anything and everything goes through, obviously. But you know, I think a lot of the legwork has been done and is being done now. I guess now we're going to probably see these statements with overtime, trying to figure out what to do. But I think after that, you know, I'm hoping that you know, the billable hours go way down, way down.
So I have a question. The UCC and the judge both had like this fiduciary responsibility to come up with a plan that was better than Chapter 7, correct?
Not the judge.
Okay.
Not the
Well,
judge.
the
Yeah.
UCC then. And I thought like the judge kind of ruled on that or something, but it doesn't matter. The UCC, right?
It's the debtor, right? It's the debtor that chose Chapter 11.
Okay.
Right.
So the debtor has this responsibility to come up with a better idea than just saying screw it, sell everything. And for that we have the UCC that's supposed to be kind of like on our side, although that's very questionable. Um, to come up with a plan that they're like, I got an idea. What if we took a bunch of money from creditors and we launched this mining business where it's an extremely cutthroat, volatile business already, and 90+% of startups fail. So this one, being in the crypto industry in a mining business, is probably at least 95% going to fail. How is that at all responsible? And you know, to me, it's because it's clear that it's going to fail in 95 out of 100 scenarios. You know, the one scenario where fucking Iron Man dies and you know we defeat Thanos, that's where creditors win. You know, that's not an ideal, you know, situation. Like then Chapter 7 would have been better than the this whole NewCo idea. That's what I don't understand about all of this. Like, why was NewCo mining any of that like at all feasible? Like, Joe, maybe you know, like,
So just I'll play devil's advocate, and I'm not taking a position here one way or another, because I think like all of this was just unclear to everybody. There was no way to know in the beginning what the right path is. But so two things: what would you say the mining assets were worth when we went into this process?
I have no idea, but like to me, even if you tell me like pretend it was worth 300 million or something, right?
Okay, and what do you think it's worth today?
I don't know, maybe because Bitcoin went up, it's or say 400 million. But like if we could have sold it for 100 million, that would have been you know,
So
statistically, I'm
yeah,
a poker player, right? I look at everything in terms of EV, expected value. The expected value of NewCo is virtually zero. That's just statistically what it is. It is. I don't care if you love Bitcoin. I don't care if you love mining. I don't care if you know, you're all about Bitcoin freedom and you live in Bitcoin Beach. Like the statistics show that this NewCo is going to fail 95% of the time. And so your equity is going to be shit. That's just the facts.
It
And
was
right.
they were
So my
offered
first question
they
was
were
like,
offered like they were offered I think 220, 200 million
and
for
Tony,
mining.
okay.
how
Sorry, go
much do you
ahead,
think
Joe.
they could, if they wanted to liquidate today, Tony? How much would you guess? There's no way to know, but how much would you guess we can get if we liquidated mining?
Probably half of that,
Prob
100
no,
million.
no, they were offered
No, it's
two.
more
They were
because
offered 200, 220, 225, whatever it was, like during the auction, and they said no because they felt it was worth 500.
but
I don't.
and so what I was getting at is like initially it was almost worthless. You know, let's say call it just for the like Keith's numbers. You know, how much the actual rigs are worth. Let's say it was only worth 100 million. I believe between the beginning of this process and now that number has increased. Whether it went from 100 to
It doesn't
300 to
work that way, Joe.
But
what,
You're.
like
It
even if it
doesn't
did, like
work like that.
but Tony, let's play this out because
No, but
let's
it's a waste of time. You guys are looking at publicly traded mining companies that are using their capex, that are using their expertise to grow and to mine more and more Bitcoin, and they have Bitcoin on their balance sheet, so that's why their valuations are going up. It it doesn't just go up. because Bitcoin price went up.
Oh, it really does. So
No, but
that
it
was my
really
problem.
doesn't.
That was my problem with Thief's
No, it really
assessment the whole
doesn't.
time.
Joe, it
No,
It
doesn't.
really does.
No, it
no,
really.
private company like this, it's the same.
Hold on.
In a
No,
private
hold on.
company, it's a little more arguable, but in a public company,
It's not arguable at all.
Hold on, guys. Hold on. So,
Michael, sorry, let me just go through this for 1 second. Michael,
I
you know the
reached
public
out.
mining companies.
I reached out to CleanSpark in the earlier days of this process to see if they had interest in buying this company. They said, "Nah, I don't want your rigs."
Right,
Literally,
that was my point. That was my point. That it was most of the money. How much did we spend in bankruptcy so far?
I don't know,
Joe, you
200
should
million.
see.
I don't know. What do
Okay,
you?
so out of that 200 million, how much of that spending went towards litigation and all that other stuff versus developing these plans? Let's say 50 million, and we've been in this for a year and a half. How much of that time would we have had to spend in bankruptcy anyway because of all the litigation? So, I think a lot of people look at it as like, well, on day one we could have just done this and it would have been out. Unfortunately, once we went into Chapter 11, we were stuck in this destructive process. So the difference isn't that much, and I do believe Michael could speak to this more. But if you look at like mining companies, what they were valued at um, 18 months ago versus now, a lot of them don't have a better they don't have better fundamentals. They're not earning more necessarily, but their valuations did go up. It's a
No,
valuation.
no, 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 no. They are earning more. Every miner is in profit right now, and their valuations are lower, my friend, because of the dynamics
They're
of the.
lower. They're
Yeah,
lower than 18 months ago.
everyone's stock. Yeah, than 6 months ago. Like every miner is
Than
down
6 months ago.
50% in the last 6 months, and they're all in profit, right? I mean, because of the current price of Bitcoin, and we're pre-halving, all the miners are in profit, and their valuations are less because of dynamics. It's a brutal business. But the fact of the matter is, we're a year and a half when we still only have 80,000 miners plugged in. We can't even get all our damn miners plugged in. That's how incompetent this thing has been run. So
And I pinned that up more to the process. Everything is complicated in Chapter 11. You have to get approvals and spend triple the amount that you
you
normally
don't.
spend.
There was no. It's the course of ordinary business. It's the
Yeah,
course. All he had to do was go get another mining vendor and get the machines plugged in.
there is
Course
literally
of
not
ordinary
one.
business.
There's literally not one thing that was done efficiently once we entered Chapter 11. Before, because of we were dealing with thieves, and now because we're dealing with the Chapter 11 process, everything is more expensive. You have to run it by 10 different lawyers and professionals
No,
before you make
you
that
don't.
decision.
Not the mining company. It's course of ordinary business, and
Yeah,
Asher's running it.
but
So
ordinary course of business means that they could do it if they want to, but they still are going to. When you have a company that you own on your own, you can make decisions and implement them immediately. When you have multiple partners, you got to start spending more time building consensus. When you have a board, it's even more complicated. When you enter Chapter 11, everything is inefficient. Everything is
dude,
costly and
Yeah.
what are you,
inefficient.
Joe?
But
Joe, what are
let me
you talking
talk
about?
about. So,
They don't go to the board for these decisions. They sold the Bitcoin. I mean, like, no, the mining, they're not going to the board for mining decisions, right? No, Farrar's running it as he sees it, and he's running it
I
poorly.
I don't.
That's
I think it.
all.
I don't. Again.
Really, I mean,
I don't think it works
really,
that way.
but
really, have you
let
seen any mining
guys,
decisions made by the judge? Come on, dude. No.
but I think Joe, where you were going with this is that like you're trying to say like the math still works out in our favor because only 50 million was spent and we're gaining X number more, right? Is that where you're going with that?
That was the first point, and then I was going to make a second point. But yeah, continue.
Okay. But here's the thing. Like let's say that running the mining business, doing a NewCo with a mining business, let's all say that was at all smart financially and would have gotten us back X number of dollars more than just going with Chapter 7 liquidation or whatever, other option. Um, when does that give us that money more is the paramount and crucial part of that, because if we could have had, and I'm just throwing random numbers out here just for argument's sake, but like if you said, hey, creditors, right now we can sell everything and we can give you back 40% of your coins or money right now, or in 2 years you can get 55%.
Tecmo,
R-
I'll do one better, right? So in March, I believe it's February, March, right? If they just decided they're just gonna liquidate all this bullshit, take the 200 million in crypto or in cash that they would have gotten for the mining assets, we would have been out of bankruptcy in June with an extra 200 million in our pockets and less than,
No chance. There's no chance we would have been out in June. You had all the litigation, which we just finished, and
yeah,
all
because
the
we had a month-long silent auction. What was going on in that time? Nothing, because that's all they focused on. If they just liquidated this shit, went to an orderly wind down from the get-go, sold the mining, got rid of all these other things,
then loans wouldn't have made their case that they deserve 100% back. That was a
But
one
and
piece
they
of
would
the
have been in the same
litigation
spot.
that would have
here's the problem with
happened anyway.
the problem
Loan,
with all of this conjecture is that people are talking like you, Joe. I think, you're probably a crypto believer, sort of like I am, and all that. But we can't think in that mindset. We have to think, what does the 65-year-old who just used the account with, stables as a savings account think? And not a single one of them wanted to take that money that they took from their retirement funds and their IRAs that Alex, up until the very end, was requesting retirement funds going into Celsius. None of them thought, I'd really like to get into the mining business. Like,
I don't disagree with that one bit.
yeah,
That we were forced into an investment that we weren't looking for. Unfortunately, that is Chapter 11. The judge said it so clearly last time we were in court. Like, somebody was making a very strong argument why something shouldn't be done, and they're entitled to their assets. And the judge said, "Well, yeah, but this is Chapter 11." And like, it's simple as that. We don't have, unfortunately, we're trapped in this process. We don't have much of a choice. So my first point was just to like look at the mining company, if we would have done better initially, but that's looking backwards. Looking forwards is my second point. Is at this point, um, if like Tony or you think that the best thing, if we had our way, would to be just to liquidate, and I'm not sure I would disagree actually. What would that in reality? What would that look like? How long would it take to go through that process of liquidation again, to pivot to a liquidation, and put everything out for auction? Do you think that would take longer to get that initial distribution, and how much of a difference would it make in terms of the actual dollar value of those initial distributions?
It's hard for me to think that the initial distribution would be affected, but I think in the plan they had like up to 5 years or something like that to get us back, from the orderly wind down, from a controlled liquidation. So I think 5 years would be kind of an expectation that I'd have to be basically settled, except either possibly for the litigation trust that who knows that may go on for longer.
Right, and then the other right, and the other consideration is that just pivoting to making any major changes at this point is going to probably force us. Probably, I'm guessing, but it's more likely to force us into a situation where we have to go through some part of this process again, whether it's an auction, re-solicitation, confirmation. At this point, I don't know. I can't like say exactly how much of an issue they're dealing with, but if there's a way to get around that issue without messing up the process and getting those distributions, even if they may be a little bit less, any major change right now could cause a further delay and $20 million a month, which I don't think any of us have an appetite for.
And this is why I'm thinking that the mining facility, if the SEC takes off too, right, and just leaves us with the mining and they'll give us a ticker for the mining, we already approved the plan, meaning we already agreed to give that business that much money. Hopefully they can modify the seed fund that they need, or forest fund, however you want to look at it, and then continue with the orderly wind down. And I think the orderly wind down, it would just be a modification to the plan. Like I just, it's hard for me to believe that they'd have to resolicit votes to pivot to the orderly wind down, yet give us a public miner.
Yeah, they have to really thread the needle here.
We need them to host the spaces and just let us know what's going on,
Agreed.
But I agree with you, Joe. There's nothing we can do about looking in the past. It is what it is, right? Liquidation could have been the best. Could it not have been? Maybe dragged out litigation even further. Who the hell knows at this point? And so we have to go, where we're at right now. And, hopefully NewCo can get approved. I think we all just want it to get approved and move on with our daily lives, get distributions back in the beginning of January. But yeah, I mean, I don't know. I know a bunch of people kind of retweeted my tweet there about asking the UCC to tell us the spaces or anything like that. And, there should be no reason why they can't be communicating with us at this point. Confirmed plan. They know they got our support for the most part. Maybe not Tony, but they think they got most creditor support. I mean, judging by the numbers, unless Dima's right and everything was fudged. But so we just need more communication.
Hold on. Just to be clear, like, the support for the plan was not the support for the plan. The support was to get the fuck out. So that's
I agree. I totally agree. I mean,
I guarantee everyone wants NewCo to push through so they can instantly sell all the equity and leave. Like, you will see it happen.
Yeah, 100%. Again, that's why, like, I really wanted to just hear that, and I did hear that their number one priority is getting out. They get. You can say that there's incentives that are misaligned, but their goal is to get out. And if the quickest way out is to just modify the plan, even if there's another way to maybe potentially take longer and get more in the long run, I don't think they're going to go with that. It's a matter of degree. Obviously, there's a range here, but I think they're going to pick the most expeditious way to get out. But it's complicated. Everything is complicated in Chapter 11.
Well, just look at our peers. Right? Voyager went into bankruptcy around the same time as us. They had the whole FTX and then Binance issue, but they got out before us. Why? They did an orderly wind down. BlockFi, you can make the case Voyager is a lot less complicated than Celsius. Granted, that's fair. They only have the earn program. Look at BlockFi. They had custody, they had earn, and they had loans. They got out before us. You know why? Because they didn't pretend that they're going to restructure into a new corporation. They just wound that shit down, and they're going after FTX, and they're going to get whatever money they can from them, and they're out of bankruptcy. And yet here we are. I was going to say something. I don't want to say it's a little whatever, but we're twiddling our thumbs, hoping that the powers that be can figure something out. They can't. These guys are fucking idiots. They're not going to figure anything out.
Well, that's because
stop, Tony. It's not that they're idiots. You got to stop that. Like, they're dealing with an impossible set of circumstances. Chapter 11 is a minefield. So Voyager did something right, but they did other things very wrong, and the creditors at Voyager and BlockFi got screwed royally. So there's a million ways to get screwed in Chapter 11. It's just a matter of picking a path that you hope is going to be better, and you get screwed less. That's really what it is.
They have their egos in their own pocketbooks is what they're looking at, and they're trying to make something happen, which is impossible. It's not going to happen.
You can't boil everything down to that.
Well, what is it? Fair. So what is it then?
Hey guys,
we're in Chapter 11. That's what it is.
They got the answer affirmatively on Friday.
Yeah, I mean, all this kind of started, remember, with, oh, we're going to restructure into Kelvin. And that took however many months of like, oh, yeah, Alex is going to redo it. We're going to be great. Like this is a shit show from day one. But anyway, sorry, Santiago, go.
Oh, hey guys. Can you hear me?
Yep.
Okay, cool. I just wanted to throw this out there. I don't know if anybody's been speaking about it from the context of just capital markets, right? And more about sort of the macro background. I mean, it's really interesting if you think about when we kind of came into Chapter 11, when the craziness happened, it almost aligns with the Fed, right? And the Fed kind of, starting to move interest rates. I mean, if you look at what's happened to the premium, to the liquidity or the cash premium, it's moved 550 basis points, right? As we've gone through Chapter 11, we're entering a new norm, a new paradigm, if you will. Nobody really knows what, sort of this capital intensive, whether it's public markets or private markets, small caps, mid caps. I don't think anybody really knows what valuations and what multiples are going to look like in a higher interest rate environment, right? Higher for longer. And so I think that thinking that some of the things that have played out historically in public miners are going to somehow play out, in 2025 after the halving, when you can't access liquidity. There's a lot of sort of restrictions around credit. And I think someone said it before. I think a lot of the value that was created on the balance sheets of these miners was they were effectively holding, they were holding Bitcoin on their balance sheets, and then they were accessing effectively free money, right? Zero interest rate environment capital. And those that environment is not it's gone, right? We're probably not going to see that in the next couple of decades as we enter a completely different cycle, I think. So that's something that I think that we should just all be, kind of keeping in our minds, kind of the capital markets as we move into this. I think that a lot of those comps that we made to sort of like the dynamics and what the premium on public markets and liquidities did, and sort of the multiples on all these miners through the bull markets and all that. I don't mean to be a Debbie Downer, but I just don't think that we're going to see those things in this environment. So just want to throw that out there.
Yeah, well, happy Friday, Santiago.
Yeah, happy Friday. So yeah, there's no free lunch anymore.
Santiago, and that tightening that you're talking about works in two ways. In general, it definitely depresses valuations. For NewCo, it could work, at least relative to other miners, in our favor if we're starting out well capitalized. It puts us in a better position, but yeah.
But I agree with that. I just generally agree with that. But then you have to define what is to start well capitalized, right? We're looking at the hardware that we have, the older hardware here on the cusp of a halving, right? In an environment where capital is running 6 to 8%. So it's like, where is all that extra capital going to come from? And maybe some of that will come from the public markets, if we do go public and things of that sort. But at some point, like you have to be profitable, you have to have a margin. And again, it is harder to think that can be achieved on the back. I mean, unless the underlying commodity really, really, really pumps, which could happen, right? This is why we're all in this, because it could happen. It has surprised to the upside many a times, as it does to the downside. But unless that happens, it's really hard to see. And then we can trade it for dollars and make the investments that we really need. In other words, credit has been the driving force of American business, and we will not see access to credit in the next decade. It will not mirror what we've known historically. So that's something that I think we really need to keep in mind. There will be a premium to cash for the foreseeable future, in my opinion. So.
Is this where like the ETH staking though, like the percentage yield from the ETH staking, NewCo is looking to basically turn over to capitalize? I mean, it may only be $2 million a month or so, but to reinvest into the mining, or you think they're looking to dump off more of the ETH?
Yeah, I think that's part of the play. Certainly. Yeah, I think that's where the yield's going to come from. And I think that that's going to be, part of the play. And to the extent that it pumps, on dollar terms, that yield can end up being very interesting relative to the basis. Certainly. Yeah. We're banking on everything pumping for sure. Yeah. But I think that we should just be really mindful. I haven't exactly seen, and I don't know if that was part of the disclosures, what the capex, right, sort of the capital reserve, or sort of the capex plan for the next 12, 18 years of the mining company in order to stay quote unquote competitive in a really fierce, vicious, industry, through a halving, what that's going to look like, and realistically what needs to happen in order for us to have access to that capital. Because it seems to me like we think we have a surplus of capital reserves, but in reality we could burn through those in 6 months, right? So I just haven't seen those numbers. I don't know if we have that, the sort of that level of pro forma was kind of put out in those 1,800 pages of disclosures or whatever that came out the night before they were due.
Nah, I don't think their
I could tell
performer
you
went out
it was
18
not there.
years. I think they just went to 2026 maybe, or something like that. It was somewhere around there, 2025, 2026.
Yeah, with very narrow assumptions.
Yeah.
Tecmo, hi guys. I just have a question when it comes to the mining. What I understand so far is, okay, we would get actually 200 million up more in front, right? I'm not seeing that when we go for the orderly wind down that we get that distributed within the next year. I think that will take years, 5 years. Best examples is like Bitfinex or Mt. Gox, right? I think we have a kind of an advantage because we have Bitcoin mining and the ETH staking. And I think it's clear to say that in the next 10 years, both assets, or at least Ether, is not going away. So, and what I also do not understand with this, then with the orderly wind down, what is this illiquid debt token then? Where do I even hold that and stuff? So I think the orderly the NewCo would actually give us more the chance to get more back, even with the failure rate of 95%. Let's put it 90, probably, because we have Bitcoin and Ether. But I could be totally wrong. But yeah, that's what I see.
Well, it's a matter of timing, right? Because how long is it going to take? And then if it fails and we just wasted 4 months, was it worth it? Is it that much more, is it that much better with that potential failure? And that's failure on top of, a startup company, how likely they are to succeed or fail.
I agree with you, Tony, but again, up there, we have all the equipment already, right? Actually, we just need to plug it in. But I understand that as long as we are not out of Chapter 11, nobody really cares about plugging in these machines. I don't know, we wasted like 1.5 years, right, for that. And the question is, do we see that Azure is probably able to run our operations and to make us a good bride for probably different miners, so that I understand that we want to go public, but probably it would be already enough to show that we understand the mining operation for Bitcoin and the stake. The Ether staking is not so complicated, but the Bitcoin mining pretty good, and we would be probably a pretty good bride for the next cycle. I don't know.
Yeah, but why? Why would we be a good bride? We have old rigs.
Yeah,
we don't have
a better bride than what we are currently, right? Because currently we are total mess.
I mean, it sounds like we're a. Never mind. I think you're thinking of human trafficking is what we are right now, not necessarily a bride.
I'll tell you this much though. If June 12th, whatever the day was, you bring me in, I will sell every single rig on eBay, sell every single coin, and then just do a massive distribution, and everyone would be much happier.
Hi guys, correct me if I'm wrong, but I got in there late, so I didn't hear what Joe was stating. But we can't get listed on the SEC there. That's the problem, that this is all the rumors. But the mining without the staked ETH is nothing, because the mining, our rigs are old, but the fact that we actually had, it was debt free and had capital, what was making it appealing. But if we go to orderly wind down, we're going to unstake the ETH and distribute that, right? And so we'll just have a really old mining with no capital. Am I wrong?
Yes, I think they would end off, if they have the ability to maneuver within the orderly one, and I think they would end off holding back more than just 50 million to capitalize the staking. Again, this is not me speaking from any kind of position of knowing more than anybody else. I just, if you end off having to do an orderly wind down, but keep the mining entity alone through an orderly wind down, you're gonna need more capital to implement the plan with Cedarville. I guess they could change those plans if they wanted to and get rid of Cedarville and just make it a smaller mining company with less capitalization. But yeah, I
But like
think
I see Tony's perspective with like having to audit the old company. Would the ETH be considered Celsius and be part of the problem of the audit of not being able to, or no?
I don't think it's the ETH. I think it's all the other stuff.
So they could
Or
branch
it
the
could be ETH
ETH
too.
off with the mining and that would be all okay.
the ETH could be. Again, I don't know, but mining is the simplest because it's a separate entity and it's probably a lot more auditable than anything else. The ETH was, in that big mix of other entities and companies and moving money back and forth. So to audit that is much harder, obviously. And then all the other assets are very minimal. Like, we're not talking about a lot. It's not even worth, spending a lot to you do
It's
whatever
like
you can.
400 million. It's like 400 million is how they value
Not
it.
not including the loan. I'm saying not including the loans. All the other investments are
Not
very
including
minimal.
the loans. Yeah, no, it's 400 million of investments. It's a lot. It's not
So
minimal in any way.
hypothetically, if we did an orderly wind down, I always thought they would have to unstake the ETH, or if it's even not, and then just, distribute that. You would say some of that profit they would hold back
No,
for the
no.
mining.
So under the NewCo, all the other assets, the liquid stuff, they're gonna hold on to it. Maybe they sell it, maybe they keep it. It's up to their discretion. Under the orderly wind down, they sell that stuff. Under Chapter 7, they sell it immediately, meaning, let's say it's worth 100 million, you just put it up for auction, and if the best bid is 2 million, then you sell it for 2. Versus in the Chapter 11 liquidation, which is the orderly wind down, if it's worth 100 million, you put it up for sale, and if you can get 80, 90, or if you can get 100, you sell it. But if your best offer is 2, you say, no, I'm going to hold on to it until I can sell it. That's the difference. It's a timing thing.
Right. And that's why I thought with the orderly wind down, we would get a little more distributed because we'd get the ETH back. But then the mining actually has, because the orderly wind down in the BRICS thing actually has the mining separate.
So in the disclosure statement, which is I was a little upset about. So the way they labeled the orderly wind down is they said you'll get your distributions, in like 5 years. They just gave themselves 5 years to sell all the other stuff. So you'll get your distributions, whatever liquid crypto is there, and then as they start selling off the other assets, you'll get more distributions over time. If it takes a year, you get it all in a year. If it takes the full 5 years, you get it all in 5 years. That's the point. They wanted it to be a full market cycle so that they can, they're not forced to sell it during the downturn. They can sell it in the upturn.
So just to interject there, like, we all of a sudden think that these people are not only mining gurus, but also market timing gurus. Like, people consistently fail to time the market. That's why the market is the way it is and why it's volatile. Like, there's just no chance that they're like, you know what?
Yeah, but
We're gonna
that's
wait and hit the top.
that's
You
not
know?
that's not that's not the point. I'm saying in the NewCo keeps these assets forever, for life, pretty much. If you
No,
hold the
that's
equity,
what you were saying. I was just
yeah.
saying, like, they're not going to successfully time it. Is all I was saying.
It doesn't matter. We're going to get more money from those illiquid assets. And you're not forced to hold any equity or whatever to see that upside.
Yeah,
Which
no,
means
I'm
that
on board
means,
with that.
yeah. So if it's worth 500 million, right? That 500 million, let's say it ends up becoming worth $1 billion. If you sell your equity and someone else comes and buys it, they get that. They get that upside, not us.
Yeah.
Versus us just getting a check in the mail for whatever it was worth,
But
whatever
meanwhile,
they're able to sell for.
if I've got that call it $500, like if I got that $500 in my pocket, while someone else is waiting for it to 2x, and I can invest it on my own and do whatever the hell I want with it, then that's way better.
And shout out to Ruppi. He was the Chapter 7 liquidation day oneer, and now he's still in the space 15 months later, seeing if that's possible. If we would have listened to you, Ruppi, we would have got more.
I
And
like
I know
this
all
man,
the hate you
Rupee.
got in the beginning. I remember the hate you got.
Thank you, SP. I didn't know. I didn't have a fortune cookie, that's for sure. But yeah, I think it was kind of a no-brainer. I think Tony posted something a while ago. Every single Chapter 11 finished out with a higher recoveries for creditors when they did an orderly wind down or liquidation. So I don't see why we would be any different or be any special, you know?
Well, that goes back to my point earlier. Some people may not have been in the room, but show me the incentive, I'll show you the outcome. You know, I think there are incentives that don't align with creditor incentives that are at play here.
Yeah, but Chapter 11 is meant to restructure and then open up the company again, right? You consolidate your debts and then you just run the company again. We're restructuring into a completely fucking different company that we have no expertise in. It's not like Celsius had was a prominent miner and now they're going to restructure into a new miner, like Core Scientific, for example. We were a fucking Ponzi scheme hedge fund, and now we're going to restructure into a mining hedge fund.
Yeah, that's the craziest part about all this. That's what I said. Like, people were told that Celsius was this safe haven for retirement funds to earn, over collateralized yield, right? That's what Celsius was. And then also with like loans as well. And now if I would have told you 3 years ago, like, hey, just so you know, it's gonna pivot into a mining business, you'd be like, what? What are you talking about? Like, it doesn't make any sense.
And now we're going to stake all the ETH and then hope that there isn't some type of bug. And it doesn't wipe us out. Sounds good.
SP,
Yeah,
SP, I was saying the same damn thing 16 months ago, whatever it was. So, not just
yeah. I mean, there were several people saying it, and no one gave an F, right? So they didn't care what we were saying because the incentives were different, right? The incentives at the beginning were, oh yeah, Anthony Napolitano, he knows that in January this is all going to be resolved because he's got the inside knowledge. And Kelvin is going to be the greatest thing in the world, and Cellcat's not going to change his name and become a ridiculous, like all this ridiculousness is what it started out with. When in then you look at BlockFi and you're like, oh, okay, so that's how it should have been done.
Yeah, but it was fun. It was therapy. It's all good.
I will say there's a process, right when people didn't know what was happening, all their money is gone, and then someone said, Chapter, liquidate it, you're only going to get this. I mean, we've learned a lot through the process. And I mean, yes, I don't know. And this is like the incentive Tecmo you always talk about. I believe the same thing, but it's also for the lawyers. And it was so Rupee, you're like, oh, I would think they don't have to do any more work. I think they're going to bill the same amount of hours if they have no work to do or anything, as long as they're in Chapter 11. That's the thing. We would hope that they would be efficient with their time and say, hey, we need less people on this. It's a cash cow. They're just milking it for what it's worth, and there's no incentive for them to get out. So as just like the board members or whatever, I mean, I think as we can see, the lawyers have the most incentive to just keep going, to keep getting the paycheck.
There's zero oversight into efficiency and of how that all works. And it almost wants me to like open up an FBI investigation into fraud for the lawyers' use of resources, because there is zero oversight into it.
This dude, there's scholarship around this. This is why I got involved in the first place with you guys. Bankruptcy Inc. is a legitimate parasite on the net social welfare of, especially here in the US, our system, the West. It is absolutely something that needs to be reformed. That and tort reform are top of the list. This, your issue here, is happening time and time again. If you look at the profit maximizing equation for a law firm, the pivot going from chapter 11 to chapter 7 to that that is essential to make the most amount in fees. So the pivot is one of the worst things in my opinion. That's why I was recommending out the gates to force this down their throat, because that is the best way to save money in fees.
Yeah, I just don't. We were told the story, and I don't buy it that chapter 7 is so horrible. I just don't buy it. Like, you know.
That's why I called for a chapter 11, or excuse me, a chapter 7 a few weeks ago.
I mean, that's not why. Come on, Dima.
It's a reason why.
Yeah, it might be a reason. It's not the reason.
Well, guys, I didn't. I thought we were going to rebirth and be great. We all know, but I've changed throughout this whole thing. Get out, us go, orderly wind down. At this point, I don't know. So I have changed and have learned a lot, but I was not one of those. But Rupee, I remember you day one and getting so much. So I give credit where credit's due.
Yeah, it's going to be a rebirth. We're a born again, terrible company. Tecmo, if you guys want to open up an investigation, I know a few people you can talk to. They'll be glad to talk.
Yeah, I don't know how you take down the Bankruptcy Inc. machine. Trust me, it's something I've been racking my brain on. I always find it fascinating what happened in Delaware with Kirkland and Ellis. I mean, Kirkland and Ellis, they own 60-70% of bankruptcy filings. They are the 900-pound gorilla. And when you read scholarship around their practices over the years, you'll find some really interesting anecdotes. Like when a judge called them out for their judge shopping in Delaware, and K&E didn't file a bankruptcy claim in Delaware for like a long time. I don't remember how long it was, but it was like 6 to 16 months, something like that. That was their payback. They're saying, hey, listen, we know you guys, just like everybody else, wants the bankruptcy business in their domain, in their jurisdiction, do the business there. We're not going to file in your jurisdiction if you start fucking around with us in our monopoly. There's scholarship around this. There are legal scholars that want change, but like, how do we force this change? That's the problem.
The whole system's corrupt, but this isn't this definitely isn't the platform or the room, that's for sure. But does anybody really have any idea though with I just want to say it again, I guess I can't believe we have over 100 people in the room, which is great. And but who would have issues with getting rid of the other part of the businesses? And hopefully you're right, Tony. Hopefully it's just the alternative investments that they want to, just get rid of, and then they'll approve the ETH and the Bitcoin. I'm hoping. I don't know if they have an issue with the Ethereum or so. I have no idea. But I mean, if not, then still, I don't think anybody would care if we just eliminated the alternative investments, liquidate those, and add them to our Bitcoin ETH distribution eventually, or check in the mail. I don't think anybody would care about that. And but man, the orderly wind down, I just don't. I do not like having the private equity in something that we legitimately have zero control over, and they can ask for even more money than 50 million. To me, it just, that right there is like the biggest risk. And SP, you mentioned it before, and it just doesn't, to me, it doesn't make any sense. The NASDAQ ticker, even if it's just a mining, even if we still have to, submit the full amount that we already agreed to in the plan, as far as the 450 million, hopefully less if there's, no other parts of the business, but who knows, even if it's not, and then they could just modify. And, I think we'd all like that, and continue with the orderly wind down, whatever. But AS, the local guy, you speak the truth. The pivot, right? And then that's why when you're looking at all the fees and the waterfall, they were so damn expensive. And sure, shouldn't have been first. Yeah, probably. I think we all agree. But they were, hell bent on getting that NASDAQ listing. And now if they're still, not sure exactly, well, I mean, finish it, whatever they have to do to, to get it. And I think it's the only way creditors may eventually, we're not going to be whole. I almost think, man, it's like a pipe dream, right? And so I don't think any of us should really, be smoking that hopium right now. I mean, just getting out and getting some money is really what we should be smoking. And but having somebody accountable, company that we're invested in, if we do need liquidity and we can dump some off. I honestly, as well, don't think that a bunch of creditors are going to dump on day one. There's going to be, of course, right? I mean, but depending on distributions when they come, if people can manage, we're slightly different. This NASDAQ listing, as far as an IPO, it might be a new company coming out, but typical IPOs, basically have their founders and everybody else that's kind of incentivized with shares. And then when they go public, they obviously are like, okay, let me cash in a bit. I just, took 10 years off my life, whatever. But we're in a different situation. So, I mean, of course, there's going to be people that are going to dump on day one, and but I don't know how we can gauge that, to be honest with you. And if people just hold it out for a little bit, don't get me wrong, we could be losing 10%, 10%, 10%, whatever it may be. I mean, everybody got to choose to sell whenever they have to. And but at the end of the day, I do think it's something that would give us a better chance of at least getting a little bit more. Again, I'm not looking to be made whole. I don't think anybody in this room should be looking to be made whole. And but anyway, I know I said it a few times, but now we got a few people in the room, and I just wanted to get it off my chest one more time.
Do you want to know how I know most people are going to dump?
How?
Because I've been here as an ambassador and I've been talking to creditors for like years now, and I know exactly why people got into Celsius, why the majority of people, what their goal was and what they're doing with that money, and never once was it invest in a mining company.
Yeah, I totally get that. I mean, 100%. I mean, obviously, I'm not happy whatsoever, but circumstances are what they are. And
Yeah,
but yeah,
and I know
you
you.
know,
I know what you're saying, Ruby. I'm not, just being argumentative, but like it's a situation where people either need this money or the money was not YOLO investment money. Like Simon, is in a position where he can just ride this out and do whatever because it was that part of his portfolio. But that's not what Alex and the rest of the cronies targeted. What they targeted were money that people needed or money that people needed in retirement, and it wasn't something that they could just bet the farm on and just do whatever with. And I know that. I know I'm speaking to the choir here, but like that's why they're going to be like, give me whatever I can get back, even if it's 10%. Give it to me. I need it. You know.
yeah, I totally get that. And I'm in that camp. I just feel, I'm fortunate enough, I guess I can hold on for a little bit. and not be the day one casualty, because it's really what it would be, and it sucks to be in that situation because, at the end of the day, you are going to have a less recovery than I mean, statistically, I think about a less recovery than somebody that can even hold on for just a couple months.
Oh yeah, for sure. Like I'm not saying like that. I mean, that's a possibility. I think it's actually a greater possibility. The odds are that you get less if you hold on. But if you have that luxury, then at least you can do what you choose to do with it, right? I think Robert was next.
Yeah, I had a quick question. When we were talking about the capitalization of the mining business, how well capitalized is the competition in the mining business?
I don't know. Maybe
Very
someone else
well.
can speak to that. What I do know is that CleanSpark. I'd much rather have equity in CleanSpark.
Yeah, and CleanSpark, what I said before, as they were spending hundreds of millions of dollars building their new facilities, buying new rigs, getting ready for the halving, wanted absolutely nothing to do with what Celsius Mining had to offer. Not the buildings, not the miners, nothing. CleanSpark's got a ton of cash. Marathon has like 10,000 Bitcoin HODL position or whatever. I think maybe more now. They have cash, tons of cash, and they have new rigs, and they have very cheap energy. They are very, very well situated for this halving. We're barely profitable right now. Once the halving starts, right? Once it happens, the price is going to double immediately. Not the price of Bitcoin, the price to mine the Bitcoin. So unless the price of Bitcoin also doubles immediately, we're potentially looking at months and months of losing tons of money just mining Bitcoin. But it's okay.
Yeah,
Because
that's the sad truth.
Steve Kokino said that we're going to get into AI with no background. We don't have any of the facilities. We could barely get into mining Bitcoin, but it's all right. AI is going to save us.
That's why this is my whole thought. Like initially when the Fahrenheit deal or whatever it was, and they said they're going to put us on the NASDAQ and we have a ticker, then I'm like, okay, if there's on the NASDAQ, I don't want to go the other way and we have to be listed through a broker or private, or we have to go to Canada. Like if it's not on the NASDAQ, we're screwed. Even there, it would be just a gamble. And if we could keep the ETH to show that we have zero debt, we do have old miners, but at the right time in this next bull market, easy access to be able to sell your shares and people can buy shares is what we need. Like we can't compete. The orderly wind down and keeping the mining by itself and then taking some of our money to keep it alive, it with old rigs and everything is almost impossible. But the fact that we could say we have no debt and we have capital and we're listed on something that people can buy easily during this bull market would have been possible. But if those things cannot work out, I just don't see it. So, and I don't want them to hold more of our money to keep something that's already dying alive in hopes of. Like we were taking such a risk with all those really good things in our favor. And if we can't have those, then I don't know.
Well, this isn't debt free. I hate when people say it's debt free. There's like $4 billion of debt that they're choosing not to pay back the creditors because of a bankruptcy loophole. It's not debt free. They're just choosing not to pay it to us.
Well, for it to be listed on the NASDAQ, for other people to look at the company, it kind of looked healthy. Granted, we know they robbed our bank accounts for that. I get that, Tony. But like, I'm just saying, when you're trying to list something and you're trying to, but if we can't even, I wouldn't understand how they'll allow the ETH, Tony, if you said the problem with the SEC is they're going to have to go back because the ETH is part of the old company through Celsius. Like, where did they get the money to buy the ETH? Are they going to have to do an audit on that? If that's the case, that's not going to work.
Yeah, probably. That's probably a problem too. I wouldn't be shocked.
Well, I think with the orderly wind down in the BRICS, what I heard from Miami, because he read it. He just went back and read it, that they sell the ETH. But they, like you say, if they're going to have this mining over here without any backing, and it's going to be this, they're going to have to hold more money. So they'll probably go through the lawyer and go, well, with this orderly wind down, we need more capital. They're not going to raise it. They're just going to try to take it from us and our distribute it. I don't know. And then here we go again. When things change, these lawyers take time to like interject things, and they need more of this and they need that. It's like it just keeps getting drawn out.
So the Celsius mining operation right now is only making like a couple $1 million, and they're profiting whatever. It's like a very small percentage. So if they're getting 50 million off the bat, I don't see the problem. That's a lot of money. You know how long it would take these guys to make? Forget about profit 50 million. To make 50 million at their current rate, take forever. That's a lot of money. People scoff at $50 million investment. That's a lot of fucking money. The Ordinals guys raised like 7 million, and they're doing backflips at how much money they raised. We're giving these guys 50.
But really what we want and what we came on here, can the UCC just put out a little tweet like, this is what's going on? I mean, they're supposed to be our liaison of these things. Like, I don't think they can like be under an NDA. Like, we obviously know when things are just waiting, our mind goes places, there's problems. Just address, like, yes, we are having this, but we're trying to get it done. We'll come. Their communication to us has been horrible through this, and I guess they can do whatever they want. Obviously, we just sit in spaces and complain about it, but it would be nice to just, hey, yes, we know there's rumors. It is true. Things are looking, but we're trying to find a better way to do this. And if it doesn't by this date, then da 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 da. But I know we're asking too much.
That goes back to incentive. They don't have any incentive to do so.
Their incentive, the only way you get incentive driver here is an adversarial action where you go after them. You go after the UCC, you go after K&E. Hope for discovery.
I like that train of thought.
Well, this is what I said from the very beginning, because this is typically what we see. So you, instead of you don't play by their ground rules, their roadmap. You play by our own. You start with adversarial actions first. Expose the state's lawyers as early as you can.
Well, what do you think I'm doing right now with the balloting?
Yeah, it's just all very late. You got to start this early.
Balloting was only published on the 27th of September.
Yeah, that balloting thing, I've seen that before too. That's not the first time that's happened.
Hey, Tecmo, thanks for the spaces, man. I'm going to jump down. Hopefully, whatever issues they are dealing with, they can thread the needle without this turning into like a protracted process with having to redo anything or any additional litigation or anything like that. The number one goal has to be to get out and get those distributions out to people. From my conversations, it seems like that is what they are focused on. Communication is definitely key, so hopefully we hear something early next week.
Thanks, Joe.
Hey, Cam, I see you up here. I haven't seen you in a bit. How's it going?
Good, Ruppi. How are you doing?
Happy Friday. Not bad. Kiddo comes back in about an hour and a half. We have movie night tonight. Should be fun.
Nice.
Yeah.
What's on the agenda? What movie?
Let's see. I can tell you here in a sec. I have to. It's a kids movie, of course. It's always a kids movie, and tonight is Luca. It's a Disney movie.
Yeah, my kids like that one.
Excellent. Yeah, it's kind of cool. They got a little outdoor mercadito here, like an outdoor market, and they just set up a big boob tube and a projector, and all the kids come out. So it's kind of cool. A little small town stuff.
Nice. I was interested in that conversation around bankruptcy reform because it's obvious that it's needed. And the three ideas that I think would be most helpful, just to kind of rewind to that topic. I think, first of all, any company, when it's incorporated, should have a detailed, basically, emergency plan. So in the event of bankruptcy, there should be specific details for how to unwind from the start. So it's almost like your corporate prenuptial agreement. There's no reason that any company should defer this until things go bad. And I mean, it's obvious that the founders of this company didn't think for a moment about taking their foot off the gas. And now we're all paying the price for it. Like the fact that they were planning to just restart as a custody entity is like the most comical thing ever. And then the second thing is any company filing for Chapter 11, when there's provable fraud committed, there should be enhanced, inescapable penalties for every C-level officer of that company. So if you're going to file for Chapter 11, you better have made honest mistakes. If you committed fraud, automatic jail for everybody who's an executive officer. Pretty easy to do that. And you get a lot less volunteering for Chapter 11 unless you're actually provably honest. And then lastly, I think we'd all agree with this one, the fees should be based upon deliverables rather than billable hours. I don't care if you spend 2 weeks staring at NFTs. It's NFT analysis. Just charge us $100,000. Don't count the hours. Deliver results, not hours. Billable hours are the most useless way to assess usefulness. And I think we're all tired of it. In tabulating the current charges, it looks like we're up to $230 million, which was exceeding what was offered for mining that Tony was estimating. Like if we were going to get north of $200 million, like the whole purpose was been to save mining, and we didn't like the $200 million bid. And now we've spent $230 million for what? To be right where we were effectively a year and a half ago? I mean, we need to wrap this up soon.
We could have had ordinary wind down for free, is what you're saying.
Pretty much.
With no bankruptcy costs, because the mining would have covered all the bankruptcy costs. And we would have been in the exact same spot we are today. Out of bankruptcy,
Tony, you're right, but we already spent the 230 million, right? So,
no, my point is, this should have been a wind down. There's no company to restructure. Company's dead.
All you need to do is look at Voyager and BlockFi and see what we should have done.
Dude, BlockFi had 0 distributions because of the FTX nonsense that happened to them. They had no distributions. They didn't give creditors a penny, but they got out of bankruptcy. And now they're going to get whatever money comes in, basically, once everything is settled over however many years it's going to take. They're in so much worse position than we are, and they got out.
The one that gets me is how's FTX getting 90%? At least Sam made that good investment into AI. It's a lot better than the mining, I guess. What the heck?
There is no chance whatever quotes they're getting on whatever that AI company is, that it's real.
Well, you know what's funny is the reason that Sam invested in Anthropic is because a whole bunch of dumbass effective altruists founded that company. So it's this whole like weird affinity scheme. So he's like, he doesn't know anything about AI. And I mean, he's smart in some respects, but the most dangerous mistakes are stupid mistakes by smart people. And he dumped $500 million into Anthropic, and now it's got a good valuation. But it was all based upon effective altruists being there. Like, it's just such a comical investment. And he just happened to, bet on green in roulette, and it hit. And now it's like, oh, did he actually commit fraud? It's like, yes, he did.
Yeah, but does it actually have a good valuation, or is it just like estimates?
Well, we'll see if people actually put the money up. But yeah, it's people valuing it at that. So it's unclear whether they'll be able to realize it.
Yeah,
But that value's in FTT though, so that's kind of the. No, I'm just kidding.
Well, Celsius Mining is valued at $500 million. Put it up for sale. See who gives you $500 million for it. Any takers?
Yeah, and what I've heard recently was the market went up, so it's not 500 million anymore; it's $1 billion. Any takers?
We'll settle for $500 million though. You keep the profit. Yeah, those valuations, those are just numbers on a screen in the NASDAQ or whatever, New York Stock Exchange. That's not what it's actually worth. That's just what people are willing to buy the shares for. And then you do a stock split, all of a sudden more people are willing to buy the shares, so it's valued higher. It's just a game. In a private equity, it doesn't work that way. You have to actually have someone put up the cash for you to get that valuation.
We need to load up all the unplugged ant miners and take them on the Antique Roadshow and see how much it'll raise.
Yeah, we should just give them out to creditors so they could use them as paperweights. At least they can have a good use for them.
Robert raised his hand.
A couple of questions. Are all the miners in production now, or are there still a bunch that still have to be put into production?
What is it, like half, 60% that are being used?
Okay. And then one of the points that Simon made several times, and maybe he was just putting lipstick on a pig, was that a lot of those legal fees went to separate the fraud from the operating business so they could come out of it with an operating company. What are your thoughts on his take on the legal fees?
Yeah, but if you don't worry about an operating company like BlockFi, then you don't got to pay that.
Okay, so and I think he switched to orderly wind down pretty early in the process, and then got on board with trying to make the NewCo as good as it possibly could. So I guess that's a valid observation.
Well, Simon's in a much different scenario than most creditors. He's in a position where he's a venture capitalist, and so this appeals to him very much, whereas everyone else just wants to get out.
Yeah, so I'm not in a hurry to take anything out, but what I'm hearing is there's not going to be anything to take out in NewCo, even if I wait a year or two.
The odds are there will be zero left.
Oh, that's distressing.
Well, that's not true. There's different routes they can go.
I'm just talking about the NewCo. The odds are NewCo fails.
Yeah, pretty good odds on that. It's 50-50, maybe like 80-20 that it fails.
No, it's 95-5. I will take the bet. I'm a bettor. Let's do it. If you want to take 50-50, I'll gladly take that bet.
Tecmo, I'm a bettor, and I want nothing to do with that bet.
Tony, you know that Tecmo is an OG online poker player. That's where it all started.
Yeah, you should start a company called BlockFi. That's what Zach Prince. That's how he started BlockFi. He was a amateur or semi-pro poker player, and then he started BlockFi, and he was handling billions of dollars of people's money.
He bet the
Crypto.
farm on FTX. Really wise move.
Yeah, he went all in, you could say. FTX.
Hey, Zach, why don't you deposit all your customer funds on FTX, and we'll give you a bunch of FTT, the world's most pristine asset after Cell Token. How does that sound? Like, oh yeah, sure. Thanks for saving me, Sam. I'm going to go on paternity leave. He disappears and his company implodes.
Yeah, we'll give you a credit line that you probably can't even use to cover the hole in your balance sheet. All you have to do is give us all of your customer funds and a huge loan on top of it. Imagine that scenario. You have a hole in your balance sheet that you need to cover up. So you take a line of credit from FTX that will help you cover that hole. And then in return, you give them a loan backed by FTT.
To go back to Robert's question about the, how many miners are on. If you notice, this coin report, we solely just got coin report. We got no information on how many Bitcoin they mined and how many they sold and how many are hashing or anything like that. And I do like your, Cam, I watched your Helsius Network YouTube. It was pretty good and disheartening. But it seems like they're sneaking coins here and there and here and there. It's not like they're liquidating everything. And I don't know. It's another thing that's disheartening.
Yeah, I mean, the only conclusion that you can reach when looking at the coin report is they must be selling for fiat, because it's not like the stable coins are increasing. There was a marginal increase in Ethereum. So it's possible they added some there, but yeah, they mostly, they removed things from DeFi, added the staking for Ether, and then all the other stakeable assets other than ETH, they pretty much unstaked and it looks like sold off.
Yeah, and their Bitcoin holdings didn't change whatsoever. And I'm almost thinking now it's time. I mean, who knows if it did or not, because they're all doing them by thousands, right? So it was 38,000, 38,000. Do you know what the cutoff is, though? Is it literally like 37,501 is 38,000, or is it 38, like what the cutoff is to just round up?
What do you mean by cutoff?
Well, how their coin report has, saying that they have 38,000 Bitcoins, right? And but at the end of the day, is it 38,200? Is it 37,000? 37,800. Like a couple hundred Bitcoin, is kind of significant.
Yeah, you couldn't tell from those sheets. It's just going to round off. So I made a copy of their sheets into a Google Sheet doc, but it's always going to differ a little bit because we can't see down to the thousandth where it comes in. So for an asset like Bitcoin, it's much more significant. For a stable coin or ADA or DOT, it's not as big a deal. But yeah, it could be significant. But yeah, it looks like the BTC holdings haven't changed, although we can't tell with that level of specificity.
Yeah, but did the liabilities go up for Bitcoin?
Most of the liabilities were decreasing, but it's unclear why. Maybe they were closing off institutional loans, which I think they were authorized to do. They did increase their sell liabilities, though. That was the one exception. They added another 180 something K sell liabilities. So I'm really curious whether they found they owed somebody sell, or they're starting to pay fees and sell or something. That's a head scratcher right there.
Go ahead, Emmy. How you doing today? Happy Friday.
Hey, man, I'm doing fine. I just had a really quick question. It looks like there's been, I think obviously the plan has been approved by the judge, right? Am I correct about that?
Yep. Yeah, it's definitely
So
confirmed.
it seems like there's like some additional conversation taking place that I've seen on Twitter here and there. I'm not quite understanding what the remaining issues are. So I was hoping if somebody has like a 60-second synopsis or, something else that they can share, I'd love to kind of get a quick breakdown, because I guess there's concerns about NewCo actually going through. Is that the only concern at this point?
Yeah, I think so. I guess a quick breakdown is just the SEC's giving flack to the debtor to get a ticker, and surprise, surprise, maybe it's lack of organization of documents. Who knows? Examiner was bitching about that too. Maybe it has something to do with crypto industry in general. Who knows? But they're having a problem with supposedly, this is all hearsay, and that's why we want them to talk to us. But it's taken a little bit longer than anticipated, let's say, and hope it's still anticipated that we get a ticker. Otherwise, we'll pivot to the orderly wind down.
But doesn't that just mean that they have to get their documents together to get approval on on getting listed?
I honestly have no idea. I never really filled out a Form 10 and exactly all the requirements, so I'm not 100% sure. But knowing how Celsius is and how they ran their business, it's really not surprising.
I was curious because now with NewCo, with this new company being in place and with new players, I guess going to eventually be responsible for NewCo, and then the SEC reaching out, I thought that would be a good thing, right? That means like, hey, they're on board for this process. We just have to provide the right information.
Yeah, you would think so. I mean, the lady who was representing the SEC during the confirmation hearing, she wasn't necessarily warm, but not necessarily 100% cold. But, was just saying, once we receive our stuff, we'll have 60 days. And then the judge politely was asking her if her department can expedite it. But, basically it's, she's going to do it thoroughly and do whatever. So, and I have a feeling going through the thorough process, considering it can be streamlined, right? Thanks to Tony letting us know today about the bankruptcy code, to where going public can happen more in like a 60-day time frame rather than 12 months or more. And so we'll see. So I who knows? These are just the rumors circulating around, but most rumors are half truths.
So the SEC isn't giving them any pushback on getting out of bankruptcy. We can get out of bankruptcy today. It's about they're asking for an exemption on the audit, and the SEC said no. So we can get out.
Why would they be asking for the exemption, Tony? Because I thought EY was doing all their audit work.
So the illiquid assets they came from Celsius. So they require 3 years of audited financials, right?
Uh-huh.
That an auditor has to, put their name on, basically.
Right.
And because of all the illiquid assets and I'm assuming also probably the ETH staking, it came from Celsius. So they would need to see 3 years of financials on that side, which we can't do because it doesn't exist. So they have no problem with the mining. They have a problem with everything else in NewCo. Everything else would need to get audited, and we just how do you audit, Excel spreadsheet?
And there's no way, I guess, for that to be done simultaneously?
I mean, you can do it. How long is it going to take? 5 years how much money you need a forensic auditor to deep dive into Celsius's books, what account paid for what asset? It's very complicated.
I guess,
and
but the question is then, because I'm seeing all in the filings, right? Like on Stretto, EY is obviously charging a ton of money right now. So what are they doing? They must be, aren't they auditing? Isn't that what they're literally being brought in to do? Or isn't that what they were brought in to do? Because I know we complain about the lawyer fees, but EY's fees per hour are just as much.
I just posted something up in the nest about who's handling the audit. I thought EY Ernst & Young was handling it as well. But Ang, one of Celsius community members, always on top of things, corrected me. And it's company RSM. And I just posted it in the nest. And supposedly they signed their contract with them in August, beginning of August 3rd to be exact. And So I guess they had maybe 15 days to rip it up. So maybe no work happened within 15 days. I don't know, but that's still roughly around 3 months that they've had to work on the audit. So yeah, I don't know. I don't know how far they are into the process.
So the mining is fully audited, good to go. It's everything else that they're having trouble with.
But everything else is
So
just
they were
staking.
no, it's not staking. They invested in Matic. They invested in like all this other stuff. I don't mean Matic the coin. I mean Matic the decentralized organization run by a handful of people.
I understand. So it's anything that they've basically invested in, or any money movement, Okay, I got you.
All the stuff that Celsius
Yeah,
invested in when they were acting as a
yeah.
hedge fund, we want that, obviously, because that's where our money went. And they would need those transactions audited fully if they're going to be part of NewCo.
Okay.
Which probably is not possible, because it's all just intercompany loans mixed and matched, and who knows what went to what went to Chrissy's, liposuction and Botox, what went to buying this, what went to mining.
I
Nobody
understand.
knows.
I see what you guys are saying now.
What went to Alex's pocket.
And so, as a part of the bankruptcy piece, basically, we already have to, we have to have everything ready to be able to come out of bankruptcy and start NewCo immediately. So it looks like the SEC is doing what they need to do to make sure that process moves forward. Is that right?
So we can get out of bankruptcy. That part, they didn't have any objections. They're good with the way they structured everything. But they need to have their Form 10 approved by the SEC in order to get the NASDAQ listing.
Okay.
And in order to do that, they had to have everything fully audited on the Form 10. So they were asking for an exemption to not have everything audited because Celsius is dead. It really, they're arguing it shouldn't matter where the money came from because it was all whatever, right? It was all a fraud. So what they're saying, or what they were asking for, is to give us an exemption where we can only audit the mining, but you approve everything else.
Okay.
Which was a tall order, obviously, and why they had a pivot in the plan for the orderly wind down, because if it gets rejected, then they can just pivot instead of starting from scratch.
Isn't FTX going to have the same
here,
problem, Tony? Because, right, they had a bunch of mismanagement, and they're trying to relaunch the exchange of the NewCo?
100%. It's going to be the same shit. They think they're going to open up FTX 2.0. They're going to be in the same shit that we are in. Well, they're going to open up for international, not U.S., so maybe it's different. I'm not entirely sure, but yeah. So the point I was saying is they put it in the plan for orderly wind down if something like this happened. It happened, and now it doesn't seem like they want to pivot.
I got you. Okay.
Which kind of is frustrating because we're paying the BRIC team to stand by for in the exact situation that's occurring right now. The judge gave a ton of pushback why we're paying these guys so much money just to hang around. And they literally said in court, if it gets denied, then we're going to pivot. Well, it got denied, and they don't want to pivot.
So the meaning that you're saying that right now everyone still wants to proceed with NewCo and they need to work through that.
Yes. When you say everyone, I'm talking about the UCC.
Gotcha. In White case.
White case.
I got you.
Which is, one of the things that we've been arguing about is because the UCC members gave themselves very nice board seats that come with a 5% incentive program where they get 5% of a company valued at $1.4 billion. You do the math, that's like $10 million each that they could potentially be getting versus an orderly wind down where they're not going to get anything near
But
that.
right now, I know the UCC posted that, I think it was last week. So we're probably just waiting for the response from the UCC and White case just to say, hey, this is a kind of our plan of action going forward, or this is what we're trying to accomplish.
So White case, how do I say this in a nice way? It's not enough for them to win. They need everyone else to lose. trying to say it nicely. There's other ways I could say it, but they don't want to just win. They want a home run for their clients, clearly, which is not us.
You're saying is in the debtor.
No, as in the UCC members that have board seats.
Oh, I got you. I understand.
This is entirely, it's my opinion, I guess, but this is entirely self-dealing.
Okay.
Okay, so I'm sitting here hearing on one hand that the UCC members who got board seats are going to make a killing on NewCo, and on the other hand, that most people here think that NewCo is a zero. So my head's spinning.
I think a little bit of confusion there too, but I mean, I guess on the UCC side, for those people with the board seats, that's production based. Like I can't imagine them getting anything unless something is actually done, right? I don't mind aligning incentives as long as, the incentives are where if somebody's working 18 hours a day to go make NewCo successful, I'm fine with however much money we need to go put in because that return should come to us. Or maybe I'm thinking about that wrong. I'm not sure. I've never really personally structured something like this, so I'm just kind of curious.
Yeah, but they're the ones that decided the milestones.
So you're saying,
like,
I understand. You're saying there's no oversight on that process, which is why there's a conflict.
Yeah,
I understand.
They should not be voting whatsoever if they're going to toggle to a wind down or continue the course. They should have no say in this entire thing because they're conflicted.
Okay.
That's like
that makes sense. That makes sense,
me.
Right? Then you're self-setting those. It's like me saying, hey, in order for me to go get paid $300,000, I need to show up to work for 4 hours a day because I set that. There's no oversight on that. I see. I can empathize with that point.
That's like me sitting down at the end of the year being like, man, I feel like maybe I should get a bonus. I think I worked hard. Let me give myself that bonus.
Now I'm confused. I thought that they had to meet specific performance criteria in order to get anything, in order to actually acquire their equity, right? They don't have it at the beginning. Is that correct?
But according to what Tony's saying is that they've set those metrics, which is the problem, right? The performance criteria is being set by them.
Yep.
They're not in the disclosure?
I don't know. I don't think so.
Okay, but if the performance criteria, in order for them to get paid, means that the company is more than a zero, maybe much more than a zero, maybe more than what they valued it at when they said that we got X percent of our value back.
Well,
I'm still confused. Is the company a zero, or are these guys going to make money?
Let me rephrase this. So they're currently sitting in a fork in the road, right? You can continue down NewCo path, which could take a long time, could ultimately get denied, and we could be in bankruptcy for 4, 5, 6 months still. Or you can just take the loss on the public listing, and just go to orderly wind down and just distribute all the money to creditors today. So they're tasked with making that decision, and they have a financial incentive by going one direction over the other.
Right, because the risk is with our money.
The risk is with your money.
Right, so they're not taking any risk, but they're incentivized to make the NewCo something that improves in value.
Well, they're creditors as well, so they are, theoretically taking the risk, but they have substantially more to gain, potentially, on one end versus the other. Because their distributions are going to be their distributions regardless of where it goes, but on the one end, they can get their distributions plus all that extra stuff. And that extra stuff,
but they only get the extra stuff if they create a win for the rest of us peon creditors.
potentially get a win for us. Because if we go down this route and it takes 4 months, 5 months, and we're paying lawyers $20 million a month for this time, and then the SEC doesn't budge, and now we're in the exact same spot that we are today, but now we're past the halving. Are we really going to win?
I don't know.
Just a few
Right.
thoughts from the lens of my background. One, somebody brought up E&Y. I don't know exactly what that engagement looks like, but it's very common for somebody like E&Y to help offer a roadmap to how to get engaged with E&Y, but that requires some work in advance. Like, you don't just show up at JP Morgan's healthcare banker store and says, okay, we're ready to go public, let's go. That's not how it works. There's like a line. There's almost like a place marker. So an E&Y has now a place marker for NewCo. The other thing is, listen, I spent a lot of my time dealing with reporting issues around SOX 157 and level 1, level 2, level 3 type reporting issues around securities that we can't value with public companies. And it's a headache. And it takes a lot of nuance. And I can understand the issues that the SEC has along those lines, or any other regulatory body involved. Um, it's complicated. The other issue is, look at where we are right now in the cycle. It's super important to understand because valuations always end up in the toilet at certain parts of the cycle. We essentially were just in that part of the cycle. Zero interest rate environment. I think anybody who's listened to me speak before understands how I feel about Ben Bernanke and crowd. But that is a nuclear option that fucks all business models. Somebody earlier was talking about how capital markets still matter for crypto. Funding is what funding is. And the truth of the matter is, rates matter so much when looking at that. And right now, we have kind of that post hoarding market, or we're in the hoarding market, but we're in the post free access, or access to the window at free money, essentially, for institutions that know how to do it. And well, pretty much everybody did it. So this is a very strange time from a valuation perspective. By distorting markets the way our central bankers have done for the rest of the world now, it appears, because we are that leader from that perspective, all valuation models have been wrecked. And we're going through this discovery phase right now of trying to address that particular modeling problem. Anyway, sorry.
Okay, so the discussion was E&Y. I assume that's Ernst and Young, and they're the company that's going to take NewCo public?
No,
Question mark.
they're an auditor. They do more consulting audit kind of work. They're not a
Okay.
banker in that respect.
Okay, so the fact that they have an engagement means that there's some idea, or they have some idea on how they're going to go about valuing the non-liquid assets.
No, it could be purely from a relationship perspective, building a relationship. Listen, those guys are about making money, just like everybody else, charging, billable hours. So they're probably offering consulting advice how to get to a point where they can actually engage as a public company auditor. That is probably what they're doing. But I have no idea. I haven't looked at the relationship.
Okay. And then who's going to take the company public? Or will this be like a self-listing or something?
Yeah, you're talking to the wrong guy. I haven't followed this close enough. I know Perella Weinberg, they're involved. Tony's the guy to speak to about this, or Cam, one of these other guys are plugged in.
there's a lot of different firms involved. Stout Rhesus Ross was the firm that most recently put a valuation estimate on the debtor's assets. So they ballparked the mining was between, with the low end, I think it was 500 and 700 on the high end, something like that. And yeah, Perella's involved, but the UCC also has advisors. So like both sides have been hiring advisors. So like the UCC has been working obviously with White and Case as their legal representation. Their head advisory is M3, and M3 is going to be overseeing the litigation trust. But yeah, there's no shortage of professionals involved in this process, and it's costing us
But
dearly.
let's be clear, those are all tier 2 book runners. Like none of these quote unquote professional bankers are a Morgan Stanley or a JP Morgan or a Goldman Sachs. So yeah, those kind of relationships matter if you want to start moving up the ladder to the institutions with a lot more liquidity. I mean, it all depends, I think, when we look at how traditional finance is entangled with crypto. That requires scholarship all in itself. I think I see a number of different ways to look at that. But M3, all those guys, they also have the relationships with TradFi. They're more, the bankers are, we will call them whatever we want to call them. They're guys who are focused on money, period. And those guys know other guys with money, and eventually, you get upstream. But bad thing. I'm just saying this idea that becoming a listed company, the holy grail, take that with a grain of salt. Thanks, I'll drop to listening.
Well, to Aspiring's point, if you look at a company like, let's say TerraWolf, right? Back in, what is this, July, they were trading at like almost $4. I don't know what the price of Bitcoin was in July, but it's less than it is today. Today, they're trading at $1. Price of Bitcoin has gone up, 25% since then? Just because you're publicly listed, just because you're a Bitcoin adjacent corporation, doesn't mean you're going to follow the price, and doesn't mean people want to buy your stock, especially if you're not performing. Which after the halving, we're not going to perform. Our cost to mine is going to be like $60,000, $70,000, $80,000 per Bitcoin. It's going to be a while before we're positive again, in the positive.
Hey guys, I'm gonna step down, but thanks Tecmo for hosting. Appreciate that. Happy Friday, everybody, and hope everybody's got a good has a good weekend. And Joe, also wanted to thank you, bud, for coming on up and kind of getting it rolling and speaking what you know. Appreciate it. And everybody else, Cam and Tony, of course. Everybody have an awesome day.